Singapore loves one sentence more than any other. At least the salary is high. That sentence has destroyed more lives than bad investments. Yes, the payslip looks gorgeous. 5 digits, sometimes 6. Recruiters whisper numbers like they're selling forbidden fruit. Engineers, bankers, traders, tech workers, consultants all arrive thinking they've hacked capitalism. High income, low tax, clean streets, end of story. Except income is not wealth. Income is permission to keep playing. In Singapore, your salary isn't freedom. It's collateral. The moment your paycheck clears, the system starts slicing it up with surgical precision. Rent first, not optional. Housing here is not shelter, it's an asset class wearing a smile. Whether you rent a shoebox or buy $1 million concrete cube in the sky, real estate eats before you do. Property developers, REITs, banks and landowning entities collect your labor automatically every single month. Then comes the quiet extraction. CPF, forced savings. Sounds responsible until you realize liquidity has been removed from your life. Your money is yours, but not really. Not now. Not when you actually need it. Cash flow is throttled. Risk-taking becomes dangerous. Entrepreneurship becomes theoretical. You're secure on paper while living one layoff away from panic. And layoffs happen fast here. No long severance. No cultural cushioning. No second chances written into the system. One HR email and your visa timer starts ticking like a bomb. 30 days. Sometimes less. High salary. Zero runway. That's the trick. Singapore doesn't trap you with poverty. It traps you with cost structure. Your lifestyle inflates to match your income because it has to. Networking costs money. Looking employable costs money. Living near work costs obscene money. Even investing becomes a performance. Everyone talks about stocks, funds, portfolios. But notice how little actual risk people take. Why? Because when your downside is deportation, you don't gamble. You obey. The stock market here thrives not because people are bold, but because they are terrified of holding cash. Property prices climb not because homes are loved, but because there is nowhere else for money to hide. Capital flows upward, always upward, into assets owned by institutions that don't get fired. This is not a social contract, it's a balance sheet. Singapore rewards the productive while you are useful, then it erases you cleanly when you are not. No riots, no noise, no mess. Just quiet exits and LinkedIn updates about new opportunities. High pay keeps you running. No safety net keeps you silent. And that's just the entrance lobby. Singapore doesn't fire people, it expires them. Employment here is not a job, it's a temporary license to exist. Your work pass is tied to your employer like a tracking device. Lose the job, lose the country. No philosophical debate, no social appeal, no grace period that matters. The clock starts and suddenly your entire life becomes logistics. This is why everyone behaves. They call it meritocracy. That word gets thrown around like holy scripture. Work hard, perform well, get rewarded. Cute theory. In practice, it's leverage. Meritocracy only works when failure is survivable. In Singapore, failure is terminal. That changes how people invest. That changes how people speak. That changes how people think. You don't challenge management. You don't rock boats. You don't unionize. You don't experiment. You don't take big risks with startups unless you already have money or citizenship insulation. Innovation is celebrated on stage and avoided in real life. Because one bad quarter doesn't just mean a smaller bonus, it means exit. This is why salaries are high. They're not generosity, they're hazard pay. The system knows exactly what it's doing. High compensation attracts global talent fast. Short contracts keep turnover clean. When you're young, sharp, and profitable, doors open. When you slow down, age up, or cost too much, the door quietly locks behind you. No protests, no headlines, just churn. This creates a very specific financial psychology. People don't build roots, they build portfolios. Retirement planning becomes abstract because retirement somewhere else is assumed. Everyone talks about investing, but the real investment is staying employable, and that bleeds straight into the markets. People pour money into stocks and property, not because returns are incredible, but because cash equals vulnerability. Cash reminds you that if tomorrow goes wrong, you're exposed. Assets feel like armor, even overpriced assets, especially overpriced assets. So capital piles up, real estate inflates, financial products multiply. Banks smile, the city looks rich, the balance sheets look amazing. The people underneath are exhausted. Meritocracy works wonderfully for the system because it individualizes failure. If you fall, it's your fault. If you leave, you chose to move on. No one ever admits the structure did exactly what it was designed to do: extract peak productivity, then recycle the worker. Singapore doesn't need a welfare state. It has a replacement pipeline. And the scariest part, everyone knows this. They just don't say it out loud because silence is part of the compensation package. High pay buys compliance. Visas enforce it. You're not building a career here. You're renting relevance. Singapore worships property the way ancient civilizations worshipped gods. Except this god demands monthly payments. Everyone tells the same story. Buy early, stretch a little. Property only goes up. Real estate is safety. Real estate is maturity. Real estate is how you win Singapore. That narrative exists because nothing else is allowed to feel safe. Housing here is not about living. It's about financial anchoring. Once you buy, you're locked in. Mortgage, maintenance, fees, taxes, location risk, career risk, visa risk, all bundled into one glittering concrete product. You didn't buy a home, you bought a dependency. And the numbers are obscene. $1 million for an apartment that would be considered aggressively average anywhere else. $2 million if you want space. $3 million if you want prestige. The math only works if nothing ever goes wrong. Continuous employment, continuous income growth, continuous policy stability, continuous immigration demand to prop prices up. That's not investment, that's faith. Banks love this setup. Long mortgages mean long leverage. Developers love it too. Scarcity is engineered, land is rationed, supply is released just tight enough to keep prices climbing and buyers desperate. The government smiles and calls it stability. But here's the part no one advertises. Once you own, you can't afford to fail. Once you own, you can't afford to leave. Once you own, you can't afford to slow down. Your asset becomes a productivity leash. Miss payments and the system doesn't care how talented you are. Property doesn't ask about merit. It just asks for cash, on time, every month, forever. This is why people cling to jobs they hate. This is why burnout is normalized. This is why people measure success by square footage instead of autonomy. The apartment becomes proof you survived, not proof you're free. Meanwhile, capital gains look great on paper. Everyone points to charts. Everyone posts screenshots. But liquidity, flexibility, try selling fast in a downturn. Try exiting during policy changes. Try explaining to a bank that your visa is uncertain. Property only protects you if the system continues exactly as planned. And systems never do. So money floods into real estate because it's the only thing that pretends to be permanent. Stocks feel volatile. Businesses feel risky. Cash feels weak. Property feels solid. Until it doesn't. Singapore didn't create a nation of homeowners. It created a nation of highly leveraged optimists. You don't own the apartment. The apartment owns your future decisions. And when people say, at least housing is safe here, what they really mean is, there is no alternative that doesn't scare me more. That fear is profitable. Singapore loves to cosplay as a nation of investors. Every conversation drifts towards stocks, ETFs, private banking, portfolio allocation, passive income. Cafes sound like earnings calls. Social media is full of charts, screenshots, and humble brags about returns that mysteriously never include timeframes or drawdowns. It looks sophisticated. It looks wealthy. It's mostly theatre. Here's the uncomfortable truth. Most people in Singapore are not investing from abundance. They are investing from anxiety. When your job security is conditional, your visa is temporary, and your housing is leveraged, investing stops being about upside. It becomes about not falling behind. That changes everything. People don't ask, what is the best long-term return? They ask, what can I hold without thinking too much? So money flows into the usual suspects: blue chip stocks, index funds, bank-recommended products, structured notes that look smart and behave average. Everyone diversifies, but nobody deviates. Risk is managed aggressively, not because people are prudent, but because they can't afford volatility. A bad year in the market isn't just a paper loss, it's stress layered on top of already fragile stability. This is why real wealth concentration explodes. Those with true capital can take asymmetric bets. They can hold through downturns. They can deploy money when others panic. Institutions, family offices, property conglomerates, banks. They thrive on cycles. High-income professionals do not. They dollar-cost average obediently. They rebalance politely. They accept modest returns and call it discipline. Meanwhile, inflation, housing costs, and lifestyle creep quietly eat the gains. And don't misunderstand, the market here works beautifully, just not for everyone. Singapore's financial ecosystem is optimized for capital preservation at scale, not wealth creation for individuals. Fees are clean, regulations are tight, volatility is contained. Innovation is carefully supervised, it's efficient, predictable, and incredibly good at keeping money where it already is. This is why so many people feel rich and stuck at the same time. They earn well, they invest consistently, they own assets. Yet somehow, freedom never arrives. Because the system was never designed to produce independent actors. It was designed to produce reliable contributors, people who keep working, keep consuming, keep investing, and keep the machine liquid. You're not failing at finance, you're playing a game where winning looks like stability, not escape. That's the part nobody says out loud at networking events. Every system reveals its truth at the moment it stops caring. In Singapore, that moment is when your income disappears. No speeches, no national soul-searching, no dramatic collapse. Just forms, deadlines, and polite reminders that your time is up. The same efficiency that made the city rich makes your exit painless for everyone except you. Lose your job, and the math turns brutal immediately. Rent doesn't pause, mortgages don't negotiate, CPF doesn't unlock itself because you're stressed. The market doesn't wait for your recovery arc. You discover very quickly that all that world-class efficiency was never aimed at protecting individuals. It was aimed at protecting flow, capital flow, labor flow, population flow. When one unit stops performing, it is replaced, cleanly, quietly. This is why there is no real safety net. A safety net slows replacement. Singapore hates friction. Welfare creates patience. Patience creates bargaining power. Bargaining power creates politics. The system avoids all of that by outsourcing risk entirely to the individual. You were paid well, you were taxed lightly, you were expected to manage everything else yourself. That's the deal. It just wasn't written in bold. People assume this only hits the weak or unskilled. That's comforting and wrong. It hits bankers in their 40s, tech workers after a market cycle turns, expats when industries rotate, founders when funding dries up, even locals when health or age quietly reduces their market value. The moment productivity dips, your identity shifts from asset to liability, and then comes the final insult. Everyone tells you how fair it is. You had opportunities, you earned well, you should have planned better. No one mentions that planning only works when uncertainty is bounded. In a system where housing is leveraged, employment is conditional, and residency is transactional, planning becomes guesswork dressed as responsibility. Singapore doesn't collapse people. It lets them fall. That's why the city looks calm. That's why the streets are clean. That's why there's no visible desperation. The people who fail don't stay around long enough to be seen. They leave with their LinkedIn profiles intact and their confidence quietly shredded. So yes, the pay is great. Yes, the infrastructure is impressive. Yes, the markets are efficient. But understand the price. This is not a country that catches you when you fall. It's a country that assumes you won't. And if you do, it moves on without hesitation. High income, high pressure, zero forgiveness. Welcome to Singapore.